This is Brayden Shaw with Fulcrum Home Loans, here to do your market update. 3 points in under 3 minutes. Point number one, the Fed meeting was this week. This happens quarterly, and it's the biggest meeting that we look to determine where the economy is going, what interest rates are going to do, stuff like that. So there's kind of two things I want to hit that came out in this Fed meeting. The first one is the Fed funds rate. You see all the time in news, the Fed's lowered rates or the Fed's raised rates. The Fed funds rate, what it is, it's the rate that the government lends to banks. We don't have access to it, no normal person does, so there is not a direct correlation to mortgages. When you see Fed lower rates, that does not mean that mortgage rates are going to drop that day. That just means generally overall, they think interest rates are going to stay low. They announced that they're going to keep the Fed fund rate low for the next 2 years. They're going to keep it around 0%. That means the next 2 years, mortgages should stay relatively low in this 3% range, maybe high 2% range, and it's looking really good for the next year or two as they keep the Fed funds rate low. The other thing that came out, the Fed announced that they're going to continue to buy up mortgages. I won't get too in depth here, but this just means that as they continue to buy up mortgages, it will keep interest rates low because there's a demand for all these mortgages and refinances that are happening, and so we'll see interest rates stay low as the Fed is continuing to navigate these two things. Point number two, the credit availability index came out this last week. What this is, it is an index that tracks how willing banks are to lend to individuals. It just hit a 6-year low. That means banks are really strict and holding onto their money and aren't willing to lend right now. So what that means practically is they're starting to cut off the extremes. They're not lending to the extremes. So what some of those extremes are, one is low credit scores. We used to be able to do 580, 620 credit scores. They're starting to say it's 640, 650. So they're starting to raise that a little bit to get a little bit more strict. Another thing, high loan to value. So people that want to do zero down loans, those are starting to get harder to get. I heard Idaho Housing and Finance, they're starting to become more strict on their zero down program as well. There's a bunch of these people. This doesn't mean you can't do it. We're a broker, we can shop multiple banks, we can find somewhere where it's going to work. It just means that we have to be a little more practical, put a little bit more thought and effort into it, and work for a couple weeks to get you to the point where you're ready to make the move. You just can't get pre-approved for those kind of programs day one and be ready to hit day two. So put some thought into it, think about it. Point number three, interest rates. Interest rates are continuing to hit all-time lows. I think we'll close out at an all-time low again this week. It's looking like interest rates in 30-year mortgages are that 2.8 to 2.9 range. So we're still at all-time lows. If you have any questions though, reach out to us. We'd be happy to help you with a refinance or purchase. Have a great week.